So this year is something I'm looking at a little bit different. And I'll start with my market outlook, and I don't have one. Much like everybody else, I just there's just so many variables that go into having an outlook. And as Bob just showed you, most of the times they're wrong. And for me, I'm a situational type trader. The charts are going to show you what's out there. Your strategy is going to show you what's out there. You stick to your rules, right? That's what we have control over as traders. And I'm not smart enough to decipher all the fundamentals of the world. I'm just not. I went to college, took economics like these guys, but mine was a college course, and I just read the books, and I actually left because they weren't teaching anything you couldn't read in the textbook. And we can see, it doesn't matter what you predict. It doesn't matter what you think. All you need is one word from someone like Timothy Geithner, and the market plunges. We saw it happen. 400 points, the market falls. So hanging your hat on your predictions is, my own opinion, is not a smart way to go. And nevertheless, we all have this thing inside of us. We don't want to be wrong, right? So how many times have you held on to a belief about something? You're being proven wrong, but you don't want to, admit it. And we all have that at times where we're just, just something as simple as not getting out of a trade when you should have been out a long time ago. So I'm going to stick with what's worked for me, and I'll get a little more into that in a minute. I'm going to take my positions that show up. I'm going to use my proper risk percentage. I'm not going to be afraid to get out when the trade is not working. Right? That's where my control lies. Everything else is out of my hand. I can only trade my plan that I've proven over time works for me. So if you want to scroll forward one, we're going to look at some long-term plays. Yeah, I had, and something I also want to look at as this year progresses, I've had two really nice long-term trades in the pound Swiss, the US dollar yen. Unfortunately, I couldn't add to the pound Swiss, but the US dollar yen gave me some nice additions, and both of those combined were well over 3,000 pips. And I want to find more opportunities like that to get into the start of the hard time frame swings, and most of this is off a weekly chart. Positional style plays. These are spot forex, and spot forex is really, really good for longer term trading or swing trading, day trading, and I'll get into that in a second. Spread costs can really smack you around. If you're trading a standard lot, for example, and pips you're looking at 2 pip spread, you're already in the whole $20. You look at other markets, you're not paying that just to get into the trade. So I'm going to go into that in a little bit more. Utilize Ultimate Swing Trader. That's our swing trading strategy that NetPicks has to zero in on the entries on lower time frames when higher time frames are critical levels. And all I'm saying here is when I look at a weekly chart and it's at a level that's historically proven to be a pretty strong level, we all know if you see something at a higher time frame, right, you go down to a lower time frame, you can get in that move early. And what does that do? It lessens your risk, right? So you can put more positions on, keeping to your 2% or 1%, whatever you're doing, so you have a bigger position if this trade goes in your favor. And with the pound Swiss and the US dollar Japanese yen trade I had, the risk was very, very small in these trades. The position sizing was pretty decent. So, I wasn't picking up pennies on these trades, which, that's what you want to do. Utilize pure price movements at all levels. I'm a big person for trading a strategy, but at the same time, I really want to educate myself on price itself, right? Every strategy you use, if it's indicator-based, especially, what leads the way? Price has to be present before the indicators do. All right, and a lot of people, what they do is they'll trade an indicator-based strategy and just focus on the indicators, what they're doing, and not put it in perspective of where the chart is, what the chart is telling you. And I'm going to show that with my gold chart in a second, because that's one of my my things I want to do in the new year. So longer-term plays is basically looking at some longer-term trades in the spot forex, because it's perfect for that. For years, I was a euro yen pound US trader short term. Anyone here that's a NetPicks customer, and I've spoken to so many of you via email, and in the rooms, know that those are my favorite pairs. Around September, the euro yen just decided to get really ugly for whatever reason, and it doesn't matter to me what the reason was. It just got ugly. The pound US did okay up into December. We had some problems as well, but what's happened was when the 7 Summits trader came out, I used to never trade the euro US dollar. The euro US dollar is such a heavily traded pair. It's one of the most popular pairs to trade, if not the most popular pair to trade. And when you have all these different market participants in it, what you're going to get is different levels where, the bigger players have positions, right? Support and resistance type plays. And you just find yourself getting beat up left, right, and center when you get stuck in between that. The 7 Summits Trader, the 5-minute chart on the Euro US dollar, for me, I did some testing on it, started trading in December. I love it. I love it, especially with the add-on in the trades that you can do, especially when it comes off the reversals. Now, this is open to everybody, so not everyone knows what I'm talking about now, but hopefully you've come to a webinar. The reversals, then you get the basic trade that sets up after that, and you can add on to that with the trailing. It's a phenomenal Euro US dollar. I like trading that. The built-in scale feature, expecting further price moves until proven otherwise, right? That's what scaling's all about, right? Or trailing is all about. Until you're proven that this trend is over, you want to ride as long as you can, right? Cut your losses short, take as much as the market wants to give us. So I'm going to have my fixed targets, right? Bank some profits, and then you know what? Let the market give what it's going to give me. And when the Euro US dollar is moving with good action, I don't really see a need to look at other pairs. I've been looking at the pound US on 233 SST. Good market. I'm going to look at other pairs with the SST, but I do not want to burden myself with too many pairs to look at, especially when I'm thinking of moving into a more a different market to trade. And I'm going to tell you that in a second. I think it's at the end of the slide. Let me just take a quick look. Yeah, miscellaneous. Okay. So let's go to buy gold. My buy gold chart's my next one. One great thing about NetPicks, people, is that number one, they're all traders. And when you're in a room full of people that are all traders, you find all these different markets. Will with soybeans. We have wheat. We've got gold, silver, oil. I never traded those. I started trading in the FX spot market, one of the hardest markets to trade. Not that it's hard, I guess. It just it can be pretty bloody expensive, depending on what you're trading. So you got to find a decent broker for that. But because of the vast experience that NetPicks has, my eyes have opened to gold. Now here's the problem. And I watched the charts the second half of 2010, and the first move up, the train left the station. I wasn't on board. I was staying on the side, waving goodbye to it. But here's what's interesting: is I live in Toronto, Canada. And I'll be driving down, and the guy will come on the radio. Now is a great time to buy gold, right? It's a company that sells gold. Prices that are all-time high. And I'm going to show you in a second what a bad move that is, buying markets at all-time highs. And I'll show you that in a second. And I'm not going to be suckered into the traps. And that's where I'm going to go to this next chart right here. We had an owner's webinar back in December 3rd. And it was open to all NetPicks customers, from present to past. And so we all get together and we just go over certain, things that we've come up with. And one thing I want to talk about was supply and demand. And to do that, I brought up the gold chart. And the hard right edge of this chart is December 3rd. Okay, and I said on that day, where gold is, I would not be a buyer here. Personally, I want to buy gold, but I'm definitely not going to buy it where it is right now. And I had reasons for that. And the reasons were, number one, in the area that we're at in December 3rd, there was a lot of selling pressure, as you can clearly see. But I was also afraid of one thing: new highs. People get all excited. The news is saying buy gold, it's all-time highs. That is a time I personally do not want to buy. When the news is great, I'm not trying to be a buyer. I'm looking for something else. Now, if we go to the next slide here, this is the current chart. You see what happened? We got people buying up into the new highs. They got suckered into that because the day they bought is the day that it fell. They bought the new high, and look what happened. And now it tried again, right? More buyers got suckered in, and what happened? It fell. So I want to get into gold. I have never bought gold. I never thought you could buy gold. It's just the whole thought of owning gold just kind of means something to me. So what I'm looking at doing is this. I got an area down about 1247, well, 1250 to 1236. That area right there. I'll look for a buying opportunity there. Now, I'm not just going to say I'm going to buy there. I'm going to see what price does in there, but that's an interesting area for me. And I'm also looking, if it does decide to break above these highs, I'll let it go and hopefully get a pullback. I don't want to buy new highs. As you can see what happens when you buy new highs, a lot of times you get taken out, and that's not what I want to do. So, part of my thing for this year is getting on the gold. I want to say bandwagon, but the bandwagon is buying as it's breaking the highs. So I want to do it in a more structured kind of way. And this is all just, over the course of this year, I've educated myself on price action, on supply and demand. That's something I've brought into my own day trading. And I want to keep this really short. So we go to the last slide here. Miscellaneous. I want to continue expanding my own knowledge of supply and demand in the markets. I'm a big believer is, just because you may be okay at something doesn't mean you cannot be better. You don't want to sit on your laurels and say, hey, I had a great year in 2010 because my 2010 was pretty decent. I'm very happy with it. But these are the markets we're trading, right? Who's to say 2011 is going to be 2010? And before I end this miscellaneous, there's something I want to bring up as well. I want to explore FX futures for day trading. I knew this was going to come out, only because, it's more centralized. And we've seen it all the time. When you be in a great trade, you get spiked out. Why? Spread widens, right, in the spot Forex. And that's the problem when you day trade spot Forex, is you can get stuck in these little moves. The Forex futures market, totally different. I want to explore that option. My FX spot trading for longer term plays, yes. I also want to look at a more systematic withdrawal of my funds from my account. I've got a set amount that I want to keep in my account that will allow me to still trade decent position sizing, so I still make decent money. But at the same time, I don't want to leave it sitting there. We all heard it, too big to fail. Well, I don't think anything's too big to fail, and I don't want to lose my money. And it's better in my pocket than in my broker's pocket. So I'm going to leave what I need in there and just have a more systematic withdrawal of funds. We do want to treat trading as a business, correct? And to do that, we want to pay ourselves when you're in the position to do so. I want to look at other markets such as wheat, silver, and S&P E-mini. I want to take a look at those. I'm not too educated on those, but we've got guys on this NetPicks staff that know this stuff inside and out. I want to talk quickly about what I'm looking at here. Dollar index chart. What's interesting is I talked about dollar index back in December. And for traders out there that are looking at dollar index to make their plays off of, what I find interesting with the dollar index, anyone that's not used to that, and I want to get more into the dollar index this year, is that it just measures the U.S. dollar against a whole basket of currencies, right? Not a whole lot. The euro, unfortunately, is weighted the heaviest. Now, if you look at a euro-U.S. dollar chart, it looks like the U.S. dollar is strong, right? Well, against the euro it is, but against other currencies, it's very, very weak. So U.S. dollar index, just because of the way we are right now in the global climate, I think it can be very, very misleading of the strength in the U.S. dollar index, simply because of its weighting to the euro. Real estate as well. I want to touch on that quickly. Housing prices. People are saying we've got houses in our area that have been up for sale for a long time. And I've heard from a lot of people that buying right now would be a horrible investment to do for those people that invest in real estate. And the problem is you've got this perfect storm right here. You've got prices that are kind of high, but you have low interest rates. But we all know what's going to happen soon, right? Interest rates are going to get higher. So you've got options. If you're looking for real estate right now, you've got two options to look at. You either got looking at buying a house that's overvalued, but get a decent interest rate, or you got the flip side of buying a cheaper house at a higher interest rate. We're at a really weird time in our global climate. Do I think the U.S. will recover? You know what? The U.S. is a strong nation, and I think over time they will come back. I still have faith in the U.S. dollar for now, but then I'm in Canada, so I do a lot of exchanging with U.S. dollar and Canadian dollar, and I got to tell you, I lose money when I transfer U.S. into Canadian. So you guys got to get stronger. So that's it for me. One more quick thing. Anyone that's kind of new and just want to play around with some charts, NinjaTrader. We don't promote anything here. Just know that. I trade with NinjaTrader. But for traders that want to look at end-of-day data, they have a nice little, you can get free end-of-day data now with their new provider for free. It's Kinetic. You have to download Ninja 7. So you can get that. And just, for those that are looking at end-of-day strategies, you don't have to pay for your feed because it's free from Kinetic. And I think that's it. I want one more thing. Yes. One more thing. You touched on something, Mark, right at the beginning of the presentation. I caught it. And you said a lot of traders, what they have, if they have no records, no rules, or anything like that. And that is as my functions with NetPicks, I talk to a lot of traders. And if there's one thing that I could stress to every trader out there, or every wannabe trader, is you've got to be this as a business. There's too many times traders have said, hey, look, this doesn't work. And then I've asked them, send me your back test, send me your rules, send me your diary, send me anything. it doesn't come. They don't have it. They just throw the stuff up on the chart and they just start trading. One thing I said last year, one thing that really helped me as a trader, is when you're trading, videotape yourself trading. You can go to camstudio.org, I believe it is. You can download a free screen capture software and record yourself as you're taking your trades. Record your thoughts, think out loud as you're trading. And you can definitely find ways to improve your trading that way as well. So that's all I want to cover.